In this video, we are going to break down the greatest wealth transfer in history, revealing exactly how big tech giants like Microsoft and Google are taking the vast majority of their free cash flow and handing it directly to NVIDIA and the semiconductor industry. Everyone is talking about the artificial intelligence boom, but very few people understand the underlying mechanics of where the money is actually going. For decades, the tech industry was built on software companies building ecosystems and keeping the profits for their shareholders through dividends and massive stock buybacks. But that era has officially ended. We are witnessing a structural shift in the global economy. What we are calling the greatest wealth transfer in history is the moment when the world's most powerful software companies became the biggest customers of a single hardware supplier. Right now, companies like Microsoft, Alphabet, Meta, and Amazon are facing a choice. Either they spend every spare dollar they have on NVIDIA chips, or they risk becoming obsolete in the next 5 years. This is not a normal business cycle. This is a forced transfer of billions of dollars from the balance sheets of big tech to the bank account of Jensen Huang. In this video, we are going to walk through the 5 steps of this transfer, the risks of the so-called Frankenstein financing, and why the great lockup might be the only thing that can stop this train. Stick around, because by the end of this video, you will understand the scoreboard process that separates the winners from the hype, and I will reveal the one specific stock that is quietly catching the spillover from NVIDIA's dominance. I will break this down in 7 easy to follow steps. Let's jump right in. Step 1. The hyperscaler capitulation. The first step in this wealth transfer is what I call the hyperscaler capitulation. For years, Google and Amazon tried to build their own chips to avoid paying the NVIDIA tax. They wanted to keep their margins high and stay independent, but the speed of the artificial intelligence revolution moved faster than their internal engineering teams. Today, those hyperscalers have officially given up on independence in the short term. The institutional consensus for 2026 is that hyperscaler capital expenditure will hit a staggering $700 billion forecast. To put that in perspective, that is more money than the entire gross domestic product of many developed nations. They are not spending this money on new office buildings or marketing. They are taking their free cash flow and handing checks directly to NVIDIA, Broadcom, and Advanced Micro Devices. They are effectively liquidating their own future profits to pay for the hardware required to stay in the game. This is the definition of a wealth transfer. The profit that used to go to Microsoft shareholders is now the revenue fueling NVIDIA's triple-digit growth. Step 2. The problem with Frankenstein financing. But here is where things get dangerous. As an expert investor, you have to look past the shiny hardware and look at how this is being paid for. This brings us to step 2, Frankenstein financing. Recently, the Wall Street Journal and major financial analysts have sounded the alarm on the weird ways these data centers are being funded. It is not just big companies using cash. We are seeing startups and private equity firms taking on massive debt to buy NVIDIA chips. They are using the chips themselves as collateral for loans. This creates a circular economy. If you can't drive immediate revenue and profit from the artificial intelligence you are building, the debt becomes a monster that consumes the company. This is why we are seeing market turbulence. Investors are worried that we are building a house of cards. If the revenue from artificial intelligence agents does not show up on the bottom line for the hyperscalers, they will eventually have to stop writing those multi-billion-dollar checks to NVIDIA. Step 3. NVIDIA as the single seller. Now, you might be wondering, why can't they just buy chips from someone else? That leads us to the concept of NVIDIA as the single seller in a $100 trillion industrial transition. In a normal market, if a supplier gets too expensive, you switch to a competitor. But NVIDIA has spent 20 years building a moat called CUDA. It is the software language that every artificial intelligence developer speaks. If a company switches to a different chip, They have to rewrite millions of lines of code, which could take years. In the artificial intelligence race, losing a year is the same as losing the war. Because of this, NVIDIA is the single seller of the only language that matters. Jensen Huang recently compared artificial intelligence to a 5-layer cake consisting of energy, chips, infrastructure, models, and applications. NVIDIA is the only company that has a presence in every single layer. When you buy an NVIDIA chip, you aren't just buying hardware, you are buying into the entire grid of the future. Before we move into the actual stock scoreboard and the technical levels you need to watch, I want to ask you a question. Do you think the $700 billion spending spree is a sign of a bubble? Or is it just the beginning of a 40-year cycle? If you think this is a bubble, you are probably watching the technical breakdown on the weekly charts. If you think it is just the beginning, you are looking at the $3 to $4 trillion global artificial intelligence factory build-out Jensen Huang predicted for 2030. Stay with me, because in the next section, we are going to look at the spillover effect and why one specific competitor is actually benefiting from NVIDIA being too successful. Step 4. The spillover and the Scottie Pippen effect. NVIDIA is so dominant right now that they literally cannot make chips fast enough to meet demand. This has created what analysts call the spillover effect. Think of NVIDIA as Michael Jordan. They are the undisputed greatest, but even Jordan needed a Scottie Pippen. In the semiconductor world, that role is being played by Advanced Micro Devices, or AMD. Meta and Microsoft are so desperate for compute power that when NVIDIA's wait times get too long, they are forced to hand their cash to AMD. This is why AMD is seeing 35% compounded annual growth rates in their data center business. They don't have to be better than NVIDIA, they just have to be available. For investors, this wealth transfer is trickling down the supply chain, from Taiwan Semiconductor, who actually builds the chips, to Micron, who provides the high bandwidth memory. If you want to play the wealth transfer, you don't just look at the king, you look at the entire royal court that is being funded by big tech's desperation. Step 5. The Great Lockup and BlackRock's warning. Finally, we have to talk about the exit ramp. This is Step 5, the Great Lockup. On March 9th, 2026, we saw a massive warning sign. BlackRock, the world's largest asset manager, gated certain funds related to these private tech investments. This means they stopped allowing investors to take their money out. Why? Because so much capital is tied up in physical AI and data center infrastructure that is not yet liquid. If the market panics and everyone tries to sell their tech stocks at once, there isn't enough cash to pay everyone out. This is the Great Lockup. The market recently felt like blind panic before flipping into an aggressive tech-led squeeze. This tells us that the participation is narrow. Only the generals, NVIDIA, Alphabet, and Meta, are leading the charge. If these leaders stumble, the rest of the market has no floor to catch it. Step 6. How to win in 2026. So how do you actually make money during the greatest wealth transfer in history without getting caught in a value trap? You use the scoreboard. A value trap is a stock that looks cheap on paper. Maybe it has a low price to earnings ratio, but it just keeps falling because the business is dying. To avoid this, we rank every semiconductor stock on 3 metrics: quality, growth, and value. NVIDIA currently leads the scoreboard because they have the highest quality due to CUDA and the highest growth, with the Rubin platform entering production. Broadcom is the runner-up because they are the backbone of the networking infrastructure that connects all these chips together. Intel is still at the bottom because while they are trying to get into the game with Intel foundries, they have the most work left to do to prove their execution. You do not get paid for owning the name that sounds smart. You get paid for owning the one that keeps stacking real wins. Today, that is NVIDIA and the high-end supply chain. Step 7. The technical level, when to buy. If you are looking for an entry point, you need to ignore the headlines and follow the math. institutional traders are watching the $177.82 Fibonacci pivot for NVIDIA. If the stock pulls back to that level ahead of the GTC conference, it is historically a high probability strong buy zone. Why? Because the wealth transfer hasn't stopped. Microsoft and Google are still committed to their 2026 spending plans. As long as those checks are being signed, the dip is an opportunity, not a disaster. My final thoughts: follow the math, not the narrative. The greatest wealth transfer in history is moving billions of dollars out of the old software economy and into the new compute economy. Big tech is handing their cash to NVIDIA because they have no other choice. We are moving from a world of tools to a world of artificial labor. Jensen Huang believes we are building $3 to $4 trillion of artificial intelligence factories. If he is even half right, the current market volatility is just a tiny blip on a 40-year chart. Now, I want your answer in the comments. If you could only own one semiconductor stock to catch this wealth transfer for the next 5 years, which one are you taking and why? Are you staying with the king, or are you betting on the Scottie Pippen of the group? If you want to see the deeper version of my scoreboard in real time, including exactly how I think about position sizing and risk, check out the link to my Patreon in the description. There is an onboarding video that will get you up to speed fast. If you made it this far, drop stack real wins in the comments so I know you are a smart investor who follows the math, not the narrative. Stay curious, stay calm, and I will see you in the next one.